Hi, we are your consulting firm. Together, we will look into the internal analysis of Rivian Automotive. Rivian is a US-based company that develops and manufactures electric vehicles and sells automotive and lifestyle accessories. Established in 2009 as mainstream motors by Robert J. Escaringe, which later on became Avera Automotive, changed its name to Rivian Automotive in 2011. In 2015, Rivian was incorporated as Delaware Corporation and opened research facilities in Michigan and the Bay Area. In 2017, Rivian acquired the former Mitsubishi plant in Normal, Illinois to become its primary North American manufacturing location. In 2018, Rivian revealed its first two products, the R1T and R1S. In 2019, Ford Motor Co. invested $500 million into Rivian. In 2020, Tesla filed a lawsuit against Rivian for stealing trade secrets and recruiting former Tesla employees. In 2021, two luxurious SUVs were tested. And finally, in 2022, Rivian is expected to be successful despite facing losses in the first quarter of the year. Rivian does a good job of communicating who they are and who they want to be. Rivian's vision is to be the leading electric vehicle manufacturer for generations to come. This vision statement is close to perfection as it addresses the aspect of determining who they want to be, focusing on leading the transition towards a future for sustainable mobility. Rivian is on a mission to keep the world adventurous forever. However, the mission statement is somewhat generic and can apply to other electric vehicle companies. Though the idea is aspirational and inspiring, Rivian can provide more specific details on how it plans to achieve its mission, for example, through increasing EV's adaptation. Serving as their guide in preserving and augmenting their organizational culture, Rivian has a set of compass values, coming together, asking why, staying open, zooming out, and over-delivering. From what we've seen so far, Rivian appears to be committed to upholding these values rather than just paying lip service to them. They have taken steps towards inclusion and equity by embracing active allyship, work with purpose-driven partnerships to support diverse talent and representation, and they continue to develop and innovate sustainable electric vehicles where sustainability and adventure go hand in hand. However, there are top three issues faced by Rivian. One is the lawsuit filed by Laura Schwab in 2021, claiming that she was fired after raising concerns about the company's toxic workplace-to-bro culture. Second, the state violation in 2022. A local lawsuit was filed against Rivian for dirt pollution in its ongoing facility in Georgia. Third is the delay of delivery of van and vehicle reservations due to a legal battle with Rivian's supplier. These issues are quite big for Rivian to hide, thus they must uphold their values by walking the talk and not only lip service. Rivian's management team is led by its visionary founder and superstar CEO Robert J. Escaringe. Rivian disclosed that they are highly dependent on the services and reputation of their CEO, as he is a significant influence on and driver of Rivian's business plan and product development roadmap. Losing him may give rise to fiduciary or conflict with duties. Digging into Rivian's business model, Rivian is a manufacturing company that focuses on developing vehicles and technology to inspire people to get out and explore the world using sustainable mobility. For key partners, Rivian partnered with suppliers for automotive components, brand partnership with Amazon, Ford, and Mercedes-Benz, partnered with Tesla for its supercharger network, collaboration with AT&T for the commercial fleet, with local Georgia community colleges for apprenticeship programs, the Nature Conservancy, Maasai Wilderness Conservation Trust in East Asia, and with sustainable production of Jane Goodall documentary. Rivian's key activities are designing, engineering, manufacturing, and delivering electronic vehicles directly to its customers, developing charging networks, and selling automotive and lifestyle accessories, offering other services like repair, marketing and sales, mobile app, and website maintenance. Rivian's key resources are their mobile app and website, in-house software stock, skilled workforce, technological expertise, charging infrastructure, flagship retail location, town spaces, manufacturing facility, and service centers. Rivian's value propositions include manufacturing category-defining electric vehicles and accessories, sustainable EVs with long battery range and off-road capabilities, sustainable fleet EVs, and full suite of proprietary EV and value-added services. Rivian connects with its customers through 24/7 customer support, financing, membership and software, direct sales model, demo drive events, vehicle customization, resale programs, apprenticeship programs, and insurances and warranty. Customers can reach Rivian through their mobile app, e-commerce platform, word of mouth, flagship retail establishments, email communications and targeted search, fleet OS, and charging networks. Rivian's customer segments are luxury car buyers, outdoor enthusiasts, commercial fleet operators, electric vehicle buyers, and tech-savvy buyers. Rivian's cost structure are its R&D expenses of $1.9 million in 2023, cost of revenue of $6.4 million in 2023, selling general and administrative expenses of $1.7 million in 2023. Lastly, Rivian's revenue stream are its vehicle sales, adventure accessories and gear, charging networks, maintenance and support, insurance, sales of shares, and customer deposits and delivery freight. Moving on, we go to Rivian's environmental survey. Rivian's top competitors are Tesla and Lucid Motors, with Tesla as the market leader for the electronic vehicle industry. Other competitors include Ford Motors and the Chinese-based companies NIO and Li Auto. Rivian's steep analysis. For political, Rivian must comply with the federal government's policies governing supply chain management and automotive industry operations. The United States government is putting political pressure on creating infrastructure which has a large impact on the EV market. Additionally, Rivian must conform with the National Highway Traffic Safety Administration's regulatory requirements to avoid facing far-reaching fines. For economic, the low unemployment rates in North America mean that Rivian must offer attractive perks and salaries to retain talented automotive engineers and other electric car specialists. Global supply chain shortages may impact Rivian by decreasing access to parts they need for manufacturing and creating delays across the board. Increased inflation and interest rate fluctuations has caused manufacturing and consumer prices to increase. Sociocultural, changing demographic trends and the shifting of customer preferences, cultural influences, employment patterns, and customer attitudes towards safety and health may possibly affect Rivian. Technological, Rivian has a strong proprietary technology integrated in its cutting-edge electric vehicles. Rivian would have to adopt sophisticated high-capacity batteries and autonomous driving algorithms in the future, make use of new forms of advertising through social media and their platforms to increase customer awareness, and keep its customers interested with up-and-coming technology to increase demand for EVs. Lastly, for environmental, the Environmental Protection Agency's environmental conservation standards, Rivian must ascertain it focuses on reducing carbon emissions. It must strive to ensure that their products do not raise climate change concerns. Rivian must embrace a recycling culture. Such a decision would empower car owners owning a Rivian brand to recycle lithium-ion batteries. Now we proceed to the financial analysis. Rivian's revenue trend showed an upward trajectory from 2021 to 2023. However, no revenue was reported for 2019 and 2020, as the company was in the pre-revenue stage, indicating it was still in the product development phase. The gross profit margin improved from negative 845.45% in 2021 to negative 45.78% in 2023, showing progress in generating profit from core operations despite remaining negative. In 2021, operating expenses surged due to expanded vehicle operations, covering production, R&D, sales marketing, facility expansion, charging network growth, and administrative costs. So here's a statement from Rivian in regards to their net loss. We believe that we will continue to incur operating and net losses in the future while we grow, including following our initial generation of revenues from the sale of our vehicles, which began with the R1T in September 2021 and the R1S and EDV in December 2021. Rivian's current assets surged from $2,293 in 2019 to $18,559 in 2021, then declined to $13,130 in 2022 and $12,313 in 2023, reflecting adaptive liquidity management amidst growth. Rivian's non-current assets grew steadily from 2019 to 2023, reflecting its commitment to expansion and indicating long-term financial health and growth priorities. The rising amount over the years was due to Rivian's growing operational activities and associated expenses. Total stockholder equity varied wildly from 2019 to 2023, starting at $2,375, dropping to negative $1,384, then surging to $19,516 in 2021 and declining to $9,141 in 2023. Rivian's liquidity ratios fluctuated, with the current ratio generally above 1 but declining from 2021 to 2023, indicating reduced liquidity. Similarly, the cash ratio fluctuated, showing a significant decrease in reliance on cash for immediate needs, notably from 2019 to 2023. Rivian's solvency is at risk due to a steep rise in its liabilities to equity ratio from 2022 to 2023. The negative cash flow coverage ratio in 2023 indicates insufficient cash flow to cover debt, worsening solvency concerns. Fluctuating working capital, particularly from 2020 to 2021, suggests challenges in managing short-term financial obligations impacting liquidity. Rivian's operating profit ratio peaked in 2021 with initial vehicle sales, then stabilized in 2022 and 2023, indicating a return to normal profitability. Meanwhile, the net profit ratio improved from highly negative in 2019 to less negative in 2020 and 2021, suggesting a gradual reduction in losses relative to revenue. Rivian's asset turnover surged from 0.00% in 2019 to 26.43% in 2023, signaling significant improvement in asset efficiency for revenue generation. However, inventory turnover declined from 3.55 in 2022 to 2.47 in 2023, with days increasing from 102.91 to 147.94, indicating a decrease in inventory efficiency. The CFO to revenues ratio deteriorated significantly from 2019 to 2021, with extreme large negative values, especially in 2021, with negative 4,767.27%. This suggests that Rivian's cash flow from operations was significantly negative relative to its revenues. Rivian's ROE fluctuated, often remaining negative, indicating profitability changes for shareholders. The positive ROE in 2020 likely resulted from substantial investment, but subsequent years saw a decline, possibly due to increased debt using for financing. Next, the value chain analysis, the primary activities. Inbound logistics. Rivian engages in sourcing raw materials and product components from suppliers, conducts quality inspections at the supplier level, and employs a vertical integration strategy for its operations. The company follows a direct-to-consumer sales model and manufactures all vehicles using the R1 and RCV platforms at its manufacturing facility. Rivian also ensures compliance with motor vehicle standards throughout its manufacturing and sales processes. Outbound logistics involve delivering electric vehicles to customers, ensuring on-time delivery performance. In marketing and sales, Rivian employs a diverse range of social and digital media channels to build brand awareness, including its website and mobile app. The company organizes demonstration drive events, collaborates with brands like Amazon and Ford, utilizes email communications and targeted search strategies, and engages in public relations and community outreach initiatives such as offering internship programs. After-sales services provided by Rivian encompass a range of offerings including roadside assistance, consumer and commercial services such as Rivian insurance and warranties for adventure gear. They also offer charging solutions based on North American standards like the Rivian Adventure Network, software services, proactive vehicle maintenance and repair, fleet OS, driver safety and coaching, remote diagnostics, and comprehensive 360-degree inspections. Next is Rivian supporting activities. Firm infrastructure. The organization emphasizes corporate governance guidelines that focus on cybersecurity, data privacy, and trust. It maintains ethical standards and regulatory compliance through established policies and procedures. Human resource management. The company collaborates with professional organizations and academic institutions for technical recruitment. It provides rotational programs to support professional growth and offers comprehensive onboarding for new employees. Competitive compensation packages are provided, and semi-annual surveys are conducted to gather confidential feedback. Technology development. The manufacturing facility leverages robotics for electric vehicle production. Rivian invests in research and development to create sustainable and innovative electric vehicles. Unreal Engine is utilized to generate real-time simulations displayed on in-vehicle screens. Procurement. Rivian enforces its supplier code of conduct, outlining expectations and standards for suppliers across various domains. Battery cells are sourced from Samsung SDI in South Korea. China accounts for approximately 77% of global lithium-ion battery production as of 2022. Ambarella supplies multiple chips to Rivian Automotive for its track camera system. Lastly, third service providers offers range of services such as financing, road assistance, among others. Rivian implements a product differentiation strategy by emphasizing premium electric trucks and SUVs designed for off-road capability, luxury features, and modern aesthetics. The company focuses on producing adventure vehicles and provides chassis technology known as the skateboard to target business-to-business markets and avoid direct competition, notably with Tesla. Rivian is recognized as a pioneer in the electric SUV and heavy electric vehicle sectors, areas that remain unexplored by Tesla and other competitors. Rivian also has customer focus by aiming to provide a seamless and personalized buying experience, potentially through direct sales or a limited dealership network. Rivian's Brio framework. First, innovative car chassis. Rivian has developed a unique and patented chassis design called the skateboard, which can be licensed to other outdoor electric vehicle manufacturers, providing a sustainable competitive advantage. Next, specialization in outdoor EVs. Rivian focuses on manufacturing high-quality outdoor electric vehicles, although it faces potential competition from Tesla, which is entering the SUV market with its Cybertruck. Third, vertically integrated business model. Rivian's vertically integrated business model enables the delivery of differentiated electric vehicles with strong attributes, combining efficiency on road and off-road performance, function, utility, and product refinement. However, other EV manufacturers may also have varying levels of vertical integration. Fourth, flexible production facility. Rivian's production facility in Normal, Illinois is designed for flexibility and scalability, allowing for the manufacturing of different vehicle models and volumes. It has the capacity to produce up to 150,000 vehicles annually when operating at full capacity. Next, direct sales model. Rivian sells its customer and commercial vehicles directly to customers, fostering direct relationship and interactions. This approach sets Rivian apart from EV manufacturers that rely on dealership networks, although this sales model could potentially be replicated by competitors. At the end of this analysis, Rivian has first limited product portfolio. Currently, Rivian offers only two main vehicle models, the R1T truck and the R1S SUV. This limits their market reach compared to competitors like Ford or Tesla, who offer a wider range of electric vehicles at different price points and styles. Diversifying the product portfolio could significantly increase their market share. Next, dependence on Amazon. A large portion of Rivian's initial funding came from Amazon, who also placed a sizable order for delivery vans. This creates certain dependence on a single customer. If Amazon's plans change, it could significantly impact Rivian's financial stability. Rivian should strive to diversify its customer base and revenue streams. Third, cash burn rate and stock performance. Despite high potential, Rivian's stock price has fallen considerably from its highs. The early financial reports show a significant cash burn due to factors like non-cash stock compensation and initial production ramp-up cost. They need to find ways to improve operational efficiency and potentially explore additional funding avenues to ensure long-term financial health. Growing market presence. In February 2024, Rivian's website had approximately 2,276,000 visitors, a 30% increase from January's 1,755,000. In December 2023, they had 1,941,000 visitors, and in November, 1,831,000. Rivian possesses a unique blend of innovation and potential. By addressing these internal considerations, they can solidify their position as a leader in the electric vehicle revolution. This is Lark Consulting Firm, together towards success. Thank you.